Hey, how's it going, everyone? Excuse me. Can you guys hear me okay? Is everything going okay for everyone? James Richter, how you doing? Just add Silver, how you doing? Minnesota, it's been getting pretty cold up there right now. Dan Warsaw, how you doing? First time I think I've seen your name, so welcome aboard. And hand sanitizer and mask. There you go. There you go. Bama roll tide. There you go. Sad to see Tua go, but I guess he's got to do what he's got to do for himself and his future. I guess. Uh, Paul N, how you doing? Just okay. Jeremiah Weaver, how you doing? Cyber Polynesian Pip, aloha. Max Roca, how you doing? Okay, so we'll go ahead and we'll crank it up. Hello again, everyone, and hope everyone's having a good evening or good morning wherever you may be. Welcome to another edition of Silver Bullion Television, SBTV. This is our live stream. So again, let's expect some mistakes along the way. It always happens, but we'll have some fun with it as we go along. So again, just want to welcome all of you aboard. Tanis Christie, Canada, how you doing? Welcome. Rico Stacks, how you doing? Keep stacking, brother. Keep stacking. Jeff, how you doing? Catherine, how you doing? Pennsylvania. Okay, that's about halfway around the world from where I'm at. But stay warm out in Pennsylvania. Jeez, 15 inches of snow. My gosh. Okay, Polybus, be careful. Wear wear a face mask. Uh yeah, that is true. Um, the funny part, I just decided to try and go ahead and take a look at things on Amazon, and I went ahead and took a look at face masks, and they are way overpriced, and a lot of them, if you look, a lot of them are all new seller, new seller, new seller, new seller. So it seems like there's a lot of hoarding that's starting to go on with these masks, and then guys are going on places like Amazon. It looks like to me anyway, and then they're looking to resell and profiteer out of it. So it's a sad thing, but it happens, and it happens every single time. It's a sad thing, but yeah, that was something I noticed on Amazon. So quite a bit of a shame to see that. Again, Donald Robinson, Buffalo, New York. How you doing? Lee's Uploads UK. How you doing? We had a bunch of people from UK here about a week ago. It's good to see a lot of your countrymen. So I do hope you guys had are taking care of each other back in the UK. Um, so again, good to see a lot of you guys here. Really do appreciate it. And if you are new to this channel, please do subscribe. Go ahead and click on the bell to be updated on new content, and do give us a thumbs up if you like what we do. We really do appreciate your support. And as always, you can find us on social media, our website, silverbullion.com.sg. SG, we are in Singapore, Silver Bullion, SG, Facebook, Twitter, Silver Bullion PL Private Limited, audio versions, bit.ly, bit.ly, SBTV iTunes or SBTV Spotify, and join our crisis tracker group on Telegram if you have the app, where we go over a lot of the news that comes in that can affect you economically, financially, or have to do with gold and silver. So I do hope you folks go ahead and join us on that Telegram group. Um, a lot of interesting things going on in the news. A lot of interesting things. We'll try and keep it to a minimum, though. Um, anyway, first thing I want to do is just go ahead and take a look at the gold and silver price. Markets are open in Asia, and taking a look at these prices in USD. This is on our website. We see that silver, gold, basically no real movement. Nickel going up just a bit, but it's been having a lot of headwinds. Nickel and a lot of headwinds for cobalt as well. Though those two metals, they are used in electric vehicle batteries, and it does look like the demand for EVs, it is set to does look like it's going to move up, and so that's why we're taking a look at nickel and cobalt, because the battery is everything for electric vehicles, and you know we're 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 pretty high on those that they are going to be a big part of or play a big role in everyone's future as a lot of countries start to phase out um, petrol and diesel and gas engines in favor of electric vehicles. So we'll see how these things play out. But again, this is our website, and I do hope you took the time to download the Investor Kit. The Investor Kit is it's pretty well thought out. It does in some ways introduce people to gold and silver, and it does help you to understand what the true purpose of gold and silver is. A lot of us we get hung up on just the price, and that's it. We know nothing more than just the price, but there's a whole lot more to it. So I do hope you do have the time to go ahead and take a look at that investor kit and download it if you can. Um, some comments. Let's see. Take a look here. Tanis Christie, would you get a loan from the bank to buy more silver? You know, Tanis, that's a pretty interesting question because with our company anyway, you can when you store with us, you can use the silver and the gold that you have in storage with us as collateral to take a loan on. And you can go ahead and buy more silver and gold if you want. You can go ahead and buy crypto if you want. You can. It's up to you to do whatever you want to do with your money after that. But the point being, when you store with us, you don't have to just let your precious metals sit there. With us, you can revive these assets again. You know, you can redeploy your assets and take a by taking using them as collateral. Sorry about that. And that's one of the advantages that we have that most other vaults or places have, and a lot of people do take advantage of it, and they will use their silver and gold to reinvest. And when they do this, when they take a loan on it and use it as collateral, they still own it. They don't give up any ownership rights to it. It's still there. So it's a good program to get into. Again, one of the features we have as a company that does provide vaulting services. Let's see. Wing It Tracy, 71 watching, 19 likes. Well, I'm not going to force you guys to like it. If you like it, you like it. If you don't, well, then you don't. But it's hey, it's up to you, right? Okay, let's see. Hustler of Carcosa. It's going to be an interesting week in markets, no doubt. You know, it is going to be an interesting week. Fall supply chains, exactly, exactly. You guys are hitting it all on the head. China canceled copper orders. Um, you know, that's pretty interesting because I think we all know, especially when it comes to silver, most of silver comes from secondary markets where they get it from mining things like copper, zinc, things like that. And so, you know, if let's say miners aren't making enough money on things like copper and mining or production slows down, that means less silver is going to come into the market, which could be beneficial to the silver price. So we'll see how that plays out as well. Let's see what else you guys got to say. Is there a minimum amount to store at your facility, LC? Yes. When it comes to silver, the minimum is 100 ounces, and that can be done by uh, purchasing 10-ounce bars, Royal Canadian Mint bars, as an example. 10 of those would be 100 ounces, and that's the minimum for silver. For gold, it's 100 grams. So that would be the minimum amount for gold, 100 grams. And you know there are minimums, and part of it is because we do audit 4 times a year. A third party independent auditor will come in, and you have to imagine if somebody had 3 Buffalo silver rounds, 5 Silver Eagles, 10 Canadian Maples, 100 Libertads, auditing would just simply not go efficiently. And the key with auditing is the more efficient it goes, the more we can audit. The more we can audit, the more it's proof for you that your things are there, safe and sound. So that's one of the reasons why we do have minimum requirements when it does come to storage. Okay, let's see. Just add silver. The Feds can't back out now. They're into yeah. Fed is it's in way too deep. I think every central bank is in way too deep, and we're going to get into that later on, where they're in so deep they may have to even create a new currency at this point. They're just in way too deep. What about the Tesla hit? Tesla was, I think we all agree it was just the movement on it just did not seem right. When you take a look at things like sales, for instance, when you compare Teslas to Toyotas, when you compare those two vehicles, and then you see that Tesla shares and how they're matching up with Toyota shares when Toyota has such a huge lead over car sales compared to Tesla, you know, something didn't seem right. And I think eventually, I think it was pumped up enough where investors said, okay, let's take it and run. I don't know. I did not invest in Tesla, so I wouldn't know the mentality of those investors, to be honest with you. Let's see, nameless. Hey Patrick, again, didn't see you on the live channels. Did you click on the bell? Sometimes that might be it. Just as simple as clicking on the bell or checking your settings again to make sure you get notifications. It could be something simple as that. Hopefully, it's something as simple as that. Um, let's see. Rico stacks commodities are not a problem until commodities are a problem. Yeah, that's exactly it. And a lot of times when you let a paper price dictate the true physical price, you're going to get a problem. Eventually, you're going to get a problem, and eventually, you're going to get the physical price separate from the paper price. And we've seen these things happen before. Let's see. News Junkie 3000. Love your interview with Charles Hugh Smith. Thanks. That was all Charles. Charles, he's a thinking man. And Charles, he's a thinking man. He sees two sides of the coin, and from my experience with him, he he does air or shade on the side of man, of humanity, more than he will corporate or governments. And you don't find too much of those guys around who give you facts and examples and who are well thought out. A lot of us, will just start to blab out things or parrot things, but Charles does the work. He does the research. He's very well thought, well structured in what he does and says. So if you get a chance to watch it, yeah, go ahead. Charles he's a great guy, and we appreciate having him on. Um, what is the Singapore conference? There's a lot of conferences that go on here, so I'm not sure which one you might be talking about. Um, we did have an event last week anyway, where guys from UK flew down, and we went over things like silver and gold with them. Maybe that might be it. But yeah, there's a lot of conferences that go on here. Um, okay, so I just want to touch on a little bit of the news. Some of our favorite people in the world, of course, that, and our favorite bank, that would be J.P. Morgan. I think you guys probably all heard about this by now. How what their role was in metal spoofing, and of course they're under criminal probe. So investors are said to move to bank parent after traders please. Precious metals desk was racketeering operation, and that's a big thing because that's the reason why it's more than likely going to be prosecuted under a RICO statute. So that should be interesting to see. U.S. authorities that accused six J.P. Morgan Chase and Company employees of rigging precious metals futures are building a criminal case against the bank itself. And so this time around, it's a little bit different simply because of that. The previously unreported investigation of Global Bank's parent company, part of a world of a wide-ranging federal clampdown on market manipulation, raises the prospect of criminal charges and significant fines against America's largest bank. That paragraph right there doesn't really do much for me personally because they'll just pay it off like they always do. The first paragraph was more interesting, where they're going to go after possibly the bank itself or top management. No formal accusations have been made against JP Morgan. The bank spokeswoman, Jessica Francisco, declined to comment and pointed to company filings from last year disclosing that the Justice Department's criminal division was investigating trading practices in the metals markets and related conduct. How the probe proceeds from here is likely to be watched closely. Relatively few big bank prosecutions have come to light during the Trump administration compared with a spate of big penalties and guilty pleas for banks under President Barack Obama. Justice Department declined to comment. That statement, I think it can go either way. There were some things Obama did to bring it to light, and I think with Trump, it's more about building the case because in this instance, you can see that obviously a case is being built to go into upper management. So I think you just got to be fair about it. Both presidents did something or doing something. So keep a level head with that one. And some of your comments again, Hustler of Carcosa, are any of you guys see Kirby reading that long list of JP Morgan convictions and fines? It was obscene. I had to laugh. Uh, I haven't seen it, but I do plan to go ahead and take a look at that. But again, you got to question, how is a bank simply just basically getting a slap on the wrist time and time and time again? Um, let's see. We don't, Jim, we don't want significant fines against JP Morgan. We want significant imprisonments. Exactly. I think it's already come to that point. We've for the past years, few years, all we've been seeing is people paying for their freedom. Plea deal, fine here, fine there. It, there comes a time where you have to hold people to account, where they can't just buy their way out. People need to be held to account. And that's the only way that you're going to give people confidence in any type of government or justice system. If the rich can buy their way out and the average Joe has to go to jail, what does that tell you? Tell you Tells you government is operating on at least two different levels. So I do think governments they need to they do need to start offering or not offering start passing out handing out some jail time. That's I don't think it can go any other way. They need to go about it this way already. Um, let's see. Uh, Hang on, let me catch up with some of these. Full name. What about compensating the people who have suffered due to JPM? You know, that's a great question because that manipulation has affected a lot of people. How they will put a monetary amount on it, I'm not sure. I don't know how they would go about it. They will get a fine that goes to the U.S. government, who turns a blind eye to their corruption. It's a fair statement. I can't argue with that. It's a fair statement. Um, let's see. Let me go down a bit. The law must be enforced. Absolutely. Like I said, I think that's what it comes down to. People are getting to a point where they want to see that gavel of justice slap some jail time on people. It's been way too long and way too often where guys simply just pay the fine and that's it. Excuse me. Another bit of news that was coming out was the Green Swan. I'm not sure if any of you guys have heard about this, and I'm only going to read just a part of it. What I'll do is I'll put the link here for you guys, and you guys can go ahead and go there if you want, and even download this PDF. But I'll just do one portion of it. The Green Swan. Last week we talked about there's enough gray swans out there that we don't need to even look for a black swan anymore because these gray swans, they can do a whole lot more damage potentially than that one black swan. And these gray swans, they're already here and now today. Gray swan meaning, of course, you have the white swan and the black swan, which everyone is looking for. But gray swan is kind of like in the middle type of a thing. So that was why I went ahead and spoke about gray swans last week. This is from the BIS. Okay, Green Swan. Central banking and financial stability in the age of climate change. Okay, so here we are, the age of climate change, according to central banks. And I'm just only going to read the abstract. I passed a link where you guys can download it if you want. Um, but here you go. Climate change possesses new challenges to central banks, regulators, and supervisors. This book reviews ways of addressing these new risks within central banks' financial stability mandate. However, integrating climate related risk analysis into financial stability monitoring is particularly challenging because of the radical uncertainty associated with the physical, social, and economic phenomenon that is constantly changing and involves complex dynamics and chain reactions. Traditional backward looking risk assessments and existing climate economic models cannot anticipate accurately enough the form that the climate related risks will take. These include what we call green swan risks, potentially extremely financially disruptive events that could be behind the next systemic financial crisis. Central banks have a role to play in avoiding such an outcome, including by seeking to improve their understanding of climate related risks through the development of forward looking scenario based analysis. But central banks alone cannot mitigate climate change. This complex collective action problem requires coordinating actions among many players, including governments, the private sector, civil society, and the international community. Central banks can therefore have an additional role to play in helping coordinate the measures to fight climate change. Those include climate mitigation policies such as carbon pricing, integration of sustainability into financial practices and accounting frameworks, the search for appropriate policy mixes, and the development of new financial mechanisms at the international level. All these actions will be complex to coordinate and could have significant redistributive consequences that should be adequately handled, yet they are essential to preserve long term financial and price stability in the age of climate change. What say you? Banks, central banks, the unelected, are looking at setting policy, monetary policy, it looks like, according to climate change. Should they even be getting involved in this, or should they just stick to trying to get economies right by not getting involved too much? I mean, what say you? Obviously, that's my opinion where it should be hands off. But what say you? Let's see. Paying fines with okay. Let me go back and catch what some of the comments were. Um, let's see. Jamie Diamond walks past a detective and a killer came. The detective leans over and retrieves for him. Thank you, officer. Yeah. Let's see. Leaves upload. No, Bitcoin won't be, but there will be a crypto back crypto. Okay, we'll see what that means probably in a bit. Um, I'll keep my own temple of Saturn. Thank you. Okay. Shut down Canada's oil industry and make them go totally solar. Okay. Cyber climate change is the biggest scam in history. World's divided on that one for sure. Either way, it's the world is definitely uh, divided. I can only tell you my experience from it or my opinion of it, and I was pretty much as liberal could be when Al Gore came out with his inconvenient truth. I think it was. I was in, I was totally in. And I could not understand at that time why uh, Republicans were going against it. I mean, at that time and even today, my feeling is, you know, we should just we need to just take care of what we can do, meaning be responsible for yourself. If everyone is responsible for themselves, I think we'd be okay. I mean, everyone, of course, everyone wants the planet to be healthy. I don't think there's anyone who disagrees with that. But I think it's more about the way it would be done, or the matter it would be done, and the perception of why this is coming to the forefront now. Because frankly speaking, it's always been at the forefront. I mean, you know, I think a lot of you know I'm from Hawaii. Growing up in Hawaii when I was a kid, we were hearing how Hawaii is going to sink. um, Water levels going to rise. We were hearing that since I was a kid. And I'm not going to tell you how many decades that was long ago, but again, this is why there's a problem with, or that divide with climate change. But I do believe, of course, everyone feels we should take care of the planet, but the mechanisms on how we do it, that's where the debates come in. So anyway, checking some of the comments. Turn up the volume, please. Okay, let me get in. Are you guys okay now? Audio, okay. Let me see what I'm showing here. Hang on, let me turn up something here. Audio's 100% okay. Can't hear. My speakers are at max. So some of you can hear and some of you can't. Let's see. Depends on where the you came from. Okay. Hello, all. Audio better. Okay. If audio is okay, let me know if it's okay for you. Thumbs up or thumbs down with the audio. Before I decide to make any changes to it. Um, so let's see. Give me the money of a nation, and I care not who's in. Guess what, crypto holder? You're not going to have the money of the nation. Yeah, crypto's another topic that it can be a heated topic. Okay, so I got 3 thumbs up, loud and clear, better now. Uh, okay, so from those thumbs ups that I'm seeing, I'm going to leave things as is for now. Thanks for letting me know that. Um, but this is exactly what we're going to get into, where central banks, they seem to be I don't want to say undecided, because they are decided with what they're going to do. I think it's more about how they will convince us to get on board with what they want to do, and what they want to do. Thanks, guys, appreciate it. And what they want to do is bring in a central bank digital currency, or a CBDC, and we'll go ahead and get into that. There is lots of chirping going on about central bank digital currencies. We can point out numerous times in history, though, where things like debasement led to the downfall of both economies and nations. When those things happen in time, a government, they do come up with a new currency or even a monetary system, and here we are today. Frankly speaking, central banks they're failing. They can't get what they want, and or I should say, they put things out there expecting us to act a certain way, and if we don't act a certain way, their policies can't come into play. So they're going to, it looks like, start to force things on us. Um, Banks and governments are talking about a new currency, a central bank digital currency, or a CBDC, and I'll play a short clip on that.
Maybe in the next 5 years?
I think we're a long way off.
It's going to happen a lot faster than we thought a few months ago.
Maybe even within 5 years from now. The main advantages first are within the wholesale arena on financial markets. Because we see that the existing financial infrastructure is quite outdated, it's expensive, it takes a lot of time, compliance is difficult, and a central bank digital currency could be a new single technical infrastructure which is faster, cheaper, which makes compliance in one go very easy, so that would be a big leap forward.
The first one is to substitute for the use of cash, which is declining in many advanced societies, in particular in Scandinavia. The second one is to decrease the cost of managing cash. And the third one is related to financial inclusion. So to give to unbanked segments of the population like tools to perform transactions even if they don't have a bank account.
Okay, so quick look at some of the comments before I get into some of the articles to get into this debate. Let's see. If it's a digital fiat crypto, I'll pass. Hostel of Carcosa. That's going to be tough if they decide to bring in a digital, basically a digital fiat. Um, that's going to be tough because I think people, when it if it gets to that point, people have already lost confidence in central banks, so they're going to need something to have people's confidence. And I think how that can be done is if they back it by gold, and as history continue continuously shows, new monetary systems do come in backed by something, backed by silver, backed by gold throughout history. This is what we know. So, I do think when they do go ahead and create that digital backed currency, I personally think they're going to have to back it by some type of commodity, and I'm looking at gold as being that commodity. So silver and gold definitely have a future ahead of them. Let's see. Rico stacks. I believe bars are better storage wise and probably easier to test for purity and such. I may be wrong, but I would grab bars over nuggets. Nuggets. Um, Nuggets present a different situation. The purity level in nuggets is not exactly there. So for nuggets to be classified as a for it to be classified as investment grade, I don't think it's there. That maybe I might not be understanding what the context of the question, but nuggets will present an entirely different set of circumstances for sure. Um, okay, so anyway, I'll get into this. So these guys are saying there's some good points to the central bank digital currency CBDC. So I want to go ahead and take a look at this from the World Economic Forum. They just had their meetings in Davos a few weeks back, and they laid out a digital currency policy maker toolkit. And just to give credit, that video beforehand came from IMF, not IMF, ING. So you can go ahead to the YouTube channel, ING's YouTube channel, and you can find that video there. Um, but again, Davos, they had their meetings, and one thing that was included was a central bank digital currency policy making toolkit. So I just want to go over this, just a few items on it, and what they had to say was the CBDC, or a central bank digital currency, could potentially be used as a tool to achieve policy objectives such as improved safety and resilience in payment systems, increased efficiency, access, and competitiveness of payment systems, better data transmission and reporting to central banks, and financial inclusion. Okay, so there are some of the positive points of why they want to go ahead and do this, or looking at it. Central bank digital currency is a new form of digitized sovereign currency, generally conceived to be equal to physical cash or reserves held at the central bank. It is central bank money, or a component of the monetary base and a direct liability of the central bank. Today, the general public holds central bank money in the form of physical cash. For a given country, retail central bank digital currency, which can also be called general purpose CBDC, would constitute the first digitized form of central bank money and liability the general public could own. The public could have accounts of the digitized fiat currency. There's that word one of you folks just talked about, digitized fiat currency, with the central bank, or hold central bank digitized digital currencies on mobile devices, prepared prepaid cards, or other forms of digital wallets, while the central bank issues and manages retail CBDC. When central banks issue their digital currency, they may substitute an existing liability, namely physical cash or commercial bank reserves, at the central bank for the CBDC. In this scheme, the composition of central bank liabilities changes, but the size of the balance sheet generally does not change. Alternatively, the central bank could issue CBDC as a new liability in exchange for bonds or other assets, increasing the total size of the balance sheet. Um, okay, so they're still seeing money as a liability. Um, okay, well, If demand for CBDC is high and commercial bank customers wish to redeem their deposits for CBDCs, this might have disruptive consequences on the banking sector with potential impacts on financial stability. The substitution of deposits for CBDC might also have dampening effects on the money multiplier process, requiring the central bank to grow its balance sheet in order to offset the change and guarantee a sufficient supply of liquidity to the economy. Token based. Token based retail or wholesale central bank digital currencies are said to be held by the owner in digital wallets of various kinds, like physical cash represents a token or object of stored value that is digital fiat money, and that can be directly transacted by owners who are either known or pseudonymous anonymous or given a different name, let's say, because token based CBDC centers on the token object rather than the holder's identity. Okay, so let's hear that again. Token based CBDC centers on the token object rather than the holder's identity, particularly related to transaction validation. It can arguably afford greater anonymity and fewer user identity requirements than account based central bank digital currencies. Token based retail central bank digital currencies may be preferred if the central bank seeks to design a CBDC that is widely accessible like cash, potentially allowing foreign citizens and entities of various kinds to use it and not requiring user identification. If user identities are not required, the CBDC can be sent to anyone with a suitable digital wallet. Then a wider audience could employ the digitized sovereign currency. This could potentially support policy goals related to widening access to central bank money and an efficient means of retail payments. Anonymity, transaction privacy could also be stronger. However, oops, hang on. Let me see where I was. Sorry about that. Okay, I think I'm down. Yeah, sorry about that. Sometimes the PDF it moves a bit slower than well, it just moves a bit slower. But however, a universally accessible CBDC without identity requirements would increase the risk that the CBDC could be used for illicit activity and also conflict with most know your customer KYC, anti money laundering, AML, and counterfeiting and financing of terrorism. As a result, token based CBDC for wallet holders who are not identified parties may be more suitable if restricted to small value transactions. Basically, if it's a small transaction, go ahead. If it's a large one, we want to know who you are. Okay, and just a few more things. Transaction verification for any digital money is crucial to its operation for physical cash. Anti counterfeiting measures ensure cash is genuine. Digital money is also subject to counterfeiting risk. Hang on. Let's go back to this again. For physical cash, anti counterfeiting measures ensure cash is genuine. Digital money is also subject to counterfeiting risk. A vulnerability in the system could allow digitized money to be created out of thin air. Are these guys for real? That's what's happening today. Come on. Uh digitized money created out of thin air, you say, right? That's you know what, I think I can end it there. You know, more and more it seems like central banks are entirely disconnected from the rest of us. I mean, the authors of this paper here, obviously they're intelligent people, but to say something like otherwise digitized money can be created out of thin air, isn't that what's happening now? I mean, okay, so for me, obviously that, and I think for a lot of you guys there, that already throws a wrench into the whole system, and that's exactly why if they're going to go with a new system, they're going to have to back it by something. Otherwise, digitized money will be created out of thin air. We're already seeing that, right? And I think that's why in the community group, which I do thank you for participating. Over 80% of you guys felt heaven help us if they should go ahead with these central bank digital currencies. And that probably is exactly the reason why a lot of you felt that way. So let me go ahead and take a look at some of these comments. Hostler of Carcosa, that's why we like gold. There's just no replacing or substituting it. Um, let's see. The Truman Show. Truman Show. Yes. The public will value any government issued crypto accordingly. Should be funny to watch. You know, it's gonna be funny, and it's. I tell you what, man, a lot of people are not going to be happy with it. That's for sure. Um, let's see. Crypt, the new credit card. Banksters are criminals. Let's see. Okay, they stole my Seiko. What's going on there? What are you guys talking about? Okay. Um, Alcy, Staka, XAU, AUD. Yeah, they are off the hook, mate. You just blew everyone away with that statement. Mark of the beast coming. For those who have the faith or are in the faith, yeah, that's a big issue for them. Definitely. Um, let's see. But people every day get tricked with fake gold all the time. Um, you, you can't discredit that. People would need to know how to tell gold is real. That is an issue, for sure. Um, but if you're trying to know if gold is real, then that means you may think it's fake. Well, digitized money out of thin air, wouldn't that kind of be labeled as fake already? So I mean, it's a good argument though what you're saying, but I think there's ways to um to have some proof in there that the gold is real, and I think we're going to see this in the future where these things, a lot of things in the world are going to be up on the blockchain as to have some kind of proof or verification. So I do think that blockchain, or there are going to be certain elements of digitization. So this is coming from the people at Davos, right? Who again are entirely disconnected from the rest of us, and they are worried about digitized money being created out of thin air. So if you guys want, I'll try and find the link to this PDF, and I'll put it for you guys later on in the program if you want to read through the whole PDF. Um, and then we have UK. Recently had their Brexit, but before that they were already looking at exploring digital currencies. So UK central bank to explore digital currency. So what I'm saying is, whether we like it or not, you know, this is the direction that banks are taking right now and into the future. The Bank of England has officially announced that it will explore potential use cases for central bank digital currencies. Bank of England has formed a group with five other central banks and the Bank for International Settlements. The group will assess CBDC use cases, economic, functional, and technical design choices, including cross-border interoperability. The Bank of England, the UK central bank, has officially announced that it will explore potential use cases. Just to be clear on this, this was last month, January 21, 2020, so it is fairly recent, and it does show you where banks are heading. The group will be overseen by the Bank for International Settlements and will be chaired by, I'm not going to attempt the name, will be chaired by BC. We'll call him BC, head of the BIS Innovation Hub, and John Cunliffe, Deputy Governor of the Bank of England. So here we have BIS, all unelected people, right? Get your crypto daily brief. Well, okay, where'd this come from? Um, no thanks. Okay. The group of, hang on. Yeah, we'll continue from here. The BIS setup. Yes, it's a setup. Nice word. The BIS set up the hub last June to encourage international collaboration on innovative financial technology within the central banking community. Swiss National Bank later signed an operational agreement with the BIS to open the hub in the country to research a blockchain based digital currency. The group of six central banks and the BIS will now assess CBDC use cases, economic functionality. Okay, we kind of read through that part. And the group will also closely coordinate with the relevant institutions and forums, in particular the Financial Stability Board. Financial Stability Board, where have we heard that name before? And the Committee on Payments and Market Infrastructure. Um, Let me move on, see if there's anything more relevant. Okay, basically, I think that's we get the gist of it. That's most of what we need to know. They are looking at central bank digital currencies. Well, what about the Fed? So that's over in the UK. We know Europe is looking at it. And what about the Fed? So this is fairly recent also, February 6, 2020 from Reuters. Fed coin, the US central bank is looking into it. So from Reuters, Federal Reserve is looking at a broad range of issues around digital payments and currencies, including policy, design, and legal considerations. It's almost robotic. The other article pretty much sounded the same. So, okay, Federal Reserve is looking at CBDC. Um, Brainard, she's the Fed Reserve Governor. Brainard's remarks suggest more openness to the possibility of a Fed issued digital coin than in the past. That is true. The Fed wasn't really looking at digital coins before. By transforming payments, digitalization has the potential to deliver greater value and convenience at lower cost. Um, she didn't touch on interest rates or the current economic outlook. She does say, but there are risks in partial reprisal of her own and other global central bankers, worries about the rise of private digital payment systems and currencies, including Facebook's Libra digital currency project. We go back a little bit in time. Last year, Libra was a big thing that I think, frankly speaking, scared the pants off of a lot of central bankers and legislators. Some of the new players are outside the financial system's regulatory guardrails, and their new currencies could pose challenges in areas such as illicit finance, privacy, financial stability, and monetary policy transmission. Central banks are globally debating how to manage digital finance technology and the distributed ledger systems used by Bitcoin, which promises near instantaneous payment at potentially low cost. The Fed is developing its own round the clock real time payments and settlement service and is currently reviewing 200 comment letters submitted late last year about the proposed services design and scope. But the Fed also said conducting it's also said be conducting research and experimentation related to distributed ledger technologies and their potential use case for digital currencies, including the potential of CBDC. So, what do you guys feel about this? Central banks moving over into CBDCs. They're laying out the positives. That's for sure. It's helping them. It's helping the central banks. How do you guys feel about that? Take a look at your comments here. Let's see. Uh, oh, a lot of diverse opinions here. Let's see. They will have to crush other cryptos to force the people to use Fed coin. Um, maybe Jim. Maybe. Uh, but ultimately, I think this is why if they don't back it, if these new central bank digital currencies come out unbacked and are fiat once again, um, I don't think they're going to get a public following, and I think yes, people will repel from it and just say, why should I do that? I trusted you guys before. I'll go with existing decentralized cryptocurrencies as is, and so I think that's a danger that these central bankers need to consider, because I do think most people will not go along with it. Just my opinion. I don't have any numbers. This is just my own personal sentiment, and I mean that by saying, if I had a choice between a central bank digital currency and I had a choice between Bitcoin or some other crypto, I'm going to go with the other crypto. I'm not going to go with the central bank because we already know how things end up with them. So I don't think they should be, maybe arrogance not the right word to say, but I don't think they should be arrogant about this, and they need to understand that people want to have some backing to their money again. Um, let's see. They will have to back by gold to regain confidence. Full name. Yeah, I agree with that. I know they're going to need at least my confidence for one, and I'm sure they're going to need a lot of your confidences as well. Otherwise, why not go with something that's decentralized and out there right now? Um, again, Jim, they will have to legislate against private crypto, just like they legislate against people printing their own money. Jim, that's actually in Congress right now, where when it came to Libra, there's a bill right now in Congress, and it's basically forbidding big tech to get involved with crypto. Basically, it's trying to stop them from getting involved in the monetary system with by having their own crypto or tokens or whatever may be systems. Um, so that's already in place, and this is where I think central banks, they are, I would assume they're worried about losing control in some ways, and legislators, I don't think they know enough. I think a lot of us, maybe we all don't know enough. I, speaking for myself anyway, maybe we all don't know enough, and we need to pause and understand it a bit more. And I think this is where the crypto guys that are very adept in this, they should help the people to understand. And because I think for the most part, a lot of them will tend to basically um, kind of there's a rift between the gold people and the crypto people, but the thing is the two can work together. We just need to understand it a bit better, and we need to be patient in explaining it to each other. So maybe that's what I'm looking for. Crypto guys need to be patient and help gold or silver guys or the rest of us to understand it better, and at the same time, wouldn't hurt for crypto guys to understand why gold is an important aspect in real money. So I think the two sides just need to be a little bit more patient with each other. That's all. But you know, we'll see how it plays out. But just be patient. Be patient with each other. Um, okay, steal your money by corrupting your password. That's an issue. An issue could be hacking or things like that. But I want to get back into that second part of that clip that I played earlier, where they discuss a little bit about central bank currencies.
You might be able to get rid of the real currency, the hard cash and notes, to make it into a fully digital exercise.
Well, one of the hurdles is that people like me and my mother like using cash. We like bits of paper with pictures of Her Majesty the Queen on it that are universally accepted.
Like all things which have not been tried before, we don't know what the impacts are on many different fields.
Interest rates are already very low. They've tried massive purchases of bonds, quantitative easing in other words. And so what else can you do? And this might open up a range of other options for the central banks to help support economic activity in the next downturn.
Okay, so monetary policy is just not working. Central banks around the world have been trying to stimulate economies by getting people, businesses to spend money. In a debt-based monetary system, simply put, if we don't spend, the velocity of money ends. Therefore, the hope is that a CBDC can essentially force monetary policy. And what this gentleman said was pretty interesting. Where again, this is from ING. You can go ahead to their YouTube channel. But what this gentleman said was pretty interesting in that he's looking at cashless, um, a cashless society. And again, I think that doesn't sit well with a lot of people. And again, this is something central banks need to understand, because for a lot of us, when that cash is gone, a lot of us consider a lot of freedom will be gone with that cash, because of the potential that, with the digital currency, blockchain, everything we do, we buy, whatever it is, goes up on that blockchain. So, these are things again central banks need to address. Um, but I guess a positive thing about these digital coins is central banks in real time will be able to see how economies are, how they're functioning, and maybe make adjustments to keep people or keep economies viable. Maybe that's a positive thing about it. So, I don't want to say everything about it's negative, because I think, there could be some positive things into it, but it's not a blanket thing. Individuals feel differently about it. Some individuals, they don't care if they don't have cash. Other people, they absolutely want cash, because that cash it represents freedom in some ways to them. So it's a little bit different there. And looking at some of your comments again, uh, let's see, turn it up again, guys. Are you hearing me okay? Because last I checked, there were a lot of thumbs ups, so I didn't change any settings on that. So again, can you just let me know how the audio is coming in for you guys? Because for me, every level here is looking okay. Okay, so yeah, so I'll just wait a while, see if there's going to be some thumbs up coming in. Okay, RR, okay, Grow Mechanic, okay. Um, Nothing positive has ever come from any central bank even existing. Get bloody rid of them. Yeah. Okay, so again, I'm seeing thumbs up. I'm not sure why for some people, it's not coming in. Uh, but I'm in the upper limits of the clipping areas right now on all my meters. So, I'm not really going to adjust it too much. Um, okay, let's see. Computer, you're okay, but cell phone, hard to hear you. Um, yeah, okay. I am. Oh boy. You know what? I'll look into that. Off air when I'm done with this. I'll look into it. Uh, yeah. There's just too many variables what it could be right now. I mean, it's tough when some guys are saying it's okay and other guys are saying it's not. So it's tough to make an adjustment where it may ruin it for or make it worse. Um, yeah, bear with it. Um, okay, audio's fine. I'm gonna go with that. Um, okay, thanks guys, appreciate it. So where was I? Yeah, so I mean, there's a lot of questions about central bank digital currencies still, and I want to take a look at this website here. Um, this is from the IMF. Okay, so let's just say they're very credible. If we can say that, well, I guess we can. IMF is credible. But I just want to kind of go down to a few parts. Each country will have to weigh the pros and cons of the case for CBDC depending on its particular circumstance. That is true. I don't think you can just throw one blanket policy for the whole world. Uh, but getting down here, this is what interested me. Monetary policy. Some academic scholars view central bank digital currencies as a means to enhance the transmission of monetary policy. Enhance the transmission of monetary policy. I'm going to decode that to mean make policy work. They want it to work, they need to find a way to make it work. Enhancing the transmission of monetary policy. Make our policies work. They argue that an interest bearing CBDC would increase the economy's response to changes in the policy rate. They also suggest that CBDCs could be used to charge negative rates, negative interest rates, in times of prolonged crisis, thus breaking the zero lower bound constraint to the extent cash were made costly. Well, I think that's not. You see, two different things going on. One is what the bank wants. The other, again, it's what the people want. And what the bank wants, from things like this, it's not exactly what the people want. My interpretation of this is, again, let's say if we're already cashless and central banks have a digital currency, they can go ahead and move interest rates. They can move interest rates. They go negative, it's going to cost you. Cost you meaning you're going to see your CBDC account start to lessen because the interest rates are, if they do that, basically they can make things become more expensive. And if you don't spend your money, you're going to lose your money. You're going to have to keep up with what they want. And that's a problem with going negative. You hold your money in these accounts, you're going to lose a part of it, negative rate, right? You're going to lose a part of it, so you're going to want to get it out of the bank and spend. Where else can you put it? If you don't have cash, you can't put it under your mattress, right? Where are you going to put it? You have to put it back in the economy. So again, these are some things that they're going to have to work out because it's not going to sit well with people. Really, it won't. So, this is coming from IMF. Okay, so that's how I read it. I mean, some of you guys, all of you guys, maybe might interpret it a different way, but for me, I interpret it as if let's say people don't have cash and all they have is this central bank digital token. If I move interest rates, people will lose money if they hang on to cash. They're going to be forced to spend it. If they spend it, it gets in the economy, velocity of money, kickstarts economy starts moving. I mean, uh, how do you save? Are you going to be able to save at that point? I mean, basically your actions are going to be manipulated, and that's just how I see it. But everyone sees things different. Jim, we would never have 0% interest rates in an economy that is free of the meddling of private central banks, comebacks. Okay. They call currencies the basket of funds. I have a different name. Okay. I'm curious what that might be, but go easy on us, Dale. Germany bought all Perth mint silver a few weeks ago. Hmm. You know what? I'll go and take a look at that afterwards. There's just been a lot going on. It's almost impossible for me to reach into to all the areas that you folks can. So thanks for bringing that up. We'll take a look at it. Um, get a sailboat and go where life is better. Butchie Harding. I wish that could be true for all of us. I do know one guy though. He's actually doing it. So good for him. Uh, RR, the SDR is just another fiat currency. Eh, You know, that's a puzzling thing though. This SDR. I mean, if you got fiat currencies and it's not working well, and you have to keep moving interest rates here and there to get people to do what you want. I mean, why compile a whole bunch of them together? What difference is that going to make? I mean, for me anyway, what difference? What difference is it going to make? Um, and again, IMF, central banks, these guys. I didn't vote for any of them, and I don't think any of you voted for any of them. They have no accountability to us, and we know already. Central banks like the Federal Reserve, it's not a government bank. It's a private bank. So at some point, I do think um, we all need to wake up to this and understand it. And is this really what we want? It's really truly, is this really what we want? Um, okay, so other comments. Bobby Jones, stay safe in Singapore. You might be doing this from home soon. Um, can't deny it. Can't deny it. Um, it's you can't deny it. Best you can do is understand the situation and take care of yourself, because when you take care of yourself, you're taking care of everyone else around you, and that, for me, that's the bottom line. Take care of yourself. Again, be that blessing, not the burden. LC, negative rates forcing us to spend our cash forces us to consume. Some of us do not need anything except food and rent. Why penalize us for being content? LC hit it on the head, my friend. That's one of the key points. Definitely one of the key points. Taking a look at the current landscape, though, of digital currencies. And this goes back to Facebook again. During Zuckerberg's testimony back in 2019, hang on, let me just highlight this up for you guys. He, he pointed to the threat posed by China's incoming state run digital currency. Uh, that is true. China has one in the works as the reason U.S. regulators should be more accommodating toward Facebook's Libra cryptocurrency. Um, I think for a lot of us, though, Mark, that's not the solution because then we're turning everything over to you. And we all know how you handle our personal information. So to give you our personal information and our money, I'm not down with that, my friend. I don't think most of us would be. Um, so let's see. Interesting, Libra was the reason cited for accelerated development of the digital yuan and the surge in interest on central bank digital currency around the globe. French Finance Minister Bruno Le Maire considers Libra harmful to sovereignty. I agree with that. And proposes the European Central Bank issues its own public digital currency instead. Mm, don't agree with that. So, I mean, what's our choice here? A central bank or Mark Zuckerberg? Choices aren't that great, huh? Bank of England Governor Mark Carney also proposed the idea of Libra like digital currency issued by central banks to replace US dollar as the reserve currency of the world. Bank of International Settlements, the BIS, survey of 63 central banks in 2018 shows the majority were researching or starting proof of concept work on digital currencies, although most of them were not ready yet to actually launch. Survey of 23 central banks conducted by Official Monetary and Financial Institutions Forum and IBM between late last year shows similar progressive yet cautious attitude toward or among central bankers. So here are some, anyway. Let me see if I can get out of this. Here are some places where they are looking for a central bank digital coin, either now or in the future. Bahamas, I don't know if they have this yet, a sand dollar to be rolled out by end of 2019. Barbados, interesting, Caribbean countries, huh? Blockchain based version of the Barbadian dollar released in 2016. China, digital currency electronic payment, DCEP. This one is, we're hearing a lot of chirping regarding this one. So this is one to definitely watch. Central Bank of France plans to start pilot testing CBDC in 2020. Marshall Islands, okay, Saudi Arabia, UAB. Central banks of the two Gulf nations will jointly issue a digital currency named Aber sorry about that, for interbank money transfer. Sweden, the e-krona project started back in 2017 to study the need and feasibility of a CBDC. Thailand as well, Turkey, Uruguay, and I'm sure these are just some. I'm certain that there are more, but it's just to say that again, this is where we are going, and I I would feel a little bit more comfortable if these guys were saying that it's going to be backed by something. Um, let's hope it is. Let's just hope it is. Okay. Let's see. Trust in system epic failed 2016. The banks will do whatever it takes to keep the power that they have taken. Any real reforms that will benefit humanity will not come easily. Uh, Cyber. I don't have an FB account. Anyone else here in the same shoes? Not me, my friend. But I wish I never got involved in Facebook. It's one of those things that it, there has to be, because you've been in it for a while. Should be there needs to be alternatives for you to be able to slowly get off of it. My opinion, but I think eventually there will be a day. I'm not going to have Facebook either. So I'm with you there. You're ahead of me. Let's see. But there are a lot of countries that rely on Facebook for their business, and that's a problem. The sovereignty of a nation. is somehow, some way linked to a corporate entity like a Facebook, and a very powerful entity like a Facebook. I think there's over 2 billion or so people that are into Facebook, and that is a lot of the world's population that are on it. And it's something, it's not easy to get off of. If you want to get off of it, it's not as easy sometimes as we'd like to think. um let's see. Kurt Ricker, did India ever backpedal on their cashless action? Near as I can tell, it was a disaster. It didn't go well where they eliminated some notes. And i I think they're, I don't know for sure, but the things that I see, I think they're still struggling a bit with it. I don't know exactly the full details, but I'm understanding that there's still a bit of a struggle with it. Let's see. Yeah, I give up talking. Let's see, Greg. Okay, hang on. Okay, well, you guys are really a lot of diverse opinions, and that's the good thing. Um, okay, so the thing is, central banks are talking about all of these things, but it's not just central banks. Besides central banks, we're also seeing investment banks looking to create their own forms of digital tokens. And a few years back, we saw J.P. Morgan, where on one hand, Jamie Dimon was saying, something along the lines of, anyone in Bitcoin, whatever, we're going to get fired, or whatever it was, something like that. Don't quote me on it. But then we find out create they create their own coin. And this was also fairly recent, where JP Morgan creates digital coin for payments. This is from their website, jpmorgan.com. Takes a little bit of time to load. So, okay, here we go. February 14, 2019. So it's about a year ago. JP Morgan became the first US bank to create and successfully test a digital coin representing a fiat currency. The JPM coin is based on blockchain based technology, enabling the instantaneous transfer of payments between institutional clients. We sat down with Umar Farouk, head of digital treasury services and blockchain, to find out more about the announcement and what it means for future payments. What's it used for? It's a digital coin designed to make instantaneous payments using blockchain technology. Exchanging values such as money between different parties over a blockchain requires a digital currency, so they created one. Are they legal tender? No. It's a digital coin representing the US dollar held in designated accounts at JP Morgan Chase. Will it be used for other currencies besides the US dollar? Over time, JP Coin JP Morgan Coin will be extended to other major currencies. The product and technology capabilities and currency agnostic. How does it work? We can get, or I think you folks can take a look at that later. How does it different from other cryptocurrencies? Okay, so cryptocurrencies uncollateralized value is intrinsic to the coin. Fiat-backed stablecoins, it's reserves held at a bank, transparent about adequacy. Most stablecoins claim to have a one-to-one fiat collateral. The JPM coin, one-to-one redeemable in fiat currency held by JP Morgan. You know, it a lot of these one-to-one something is backed by something type of a deal. There are sometimes it's not as clear cut as you would think it to be, where there can be a lot of things that are hidden behind it. So these are things really you'd have to dive into and really do your due diligence whenever you get into anything that says it's backed one to one. But that's JP Morgan. And the thing is, central bank digital currency, investment bank digital coins, excuse me, what's the difference between these and already established cryptocurrencies such as Bitcoin? Because I think we're not really hearing anything different except to say, I want the power, I want the power, I want the power. Both are based on blockchain technology as of today, anyway. Although, take away the fancy coding, the guys with the beards, and all these terms we might not understand. And aren't all of these just forms of electronic cash, which we have already whenever we use our credit cards? So, I think there's still a lot of questions that, excuse me, a lot of questions that do have to be answered. But, the fact is, again, still, digital currencies, they are moving and they are moving towards reality, as this article from Reuters explains, where central banks are looking at creating their own digital currencies. Again, we're understanding this now, and again, it goes back to Libra. I think, as mentioned, Libra scared a lot of these guys, and their effort to launch Libra cryptocurrency poured fuel onto debates over who will control money in the future. So, like I just said, it's about power and control, because these guys are not really telling us anything different right now, each from one another of what they have. It's about power. Major economies have started to examine how so called central banks' digital currencies could become reality. So, here are some key questions on the rise of central bank digital currencies and their progress in entering the mainstream. Are CBDCs different to cryptocurrencies? This author says yes, and fundamentally so. Okay, so tell us how. CBDCs are traditional money, but in digital form. And I'm going to say again, this is the problem right from the start. Traditional money is gold and silver. And again, this is where the disconnect will always happen. Um, anyway, they're traditional money in digital form, issued and governed by a country's central bank. By contrast, cryptocurrencies like Bitcoin are produced by solving complex math puzzles and governed by disparate online communities instead of a centralized body. The common denominator is that both cryptocurrencies and CBDCs, to a varying degree, are based on blockchain technology, a digital ledger that allows transactions to be recorded and accessed in real time by multiple parties. While some retailers accept Bitcoin as a form of payment, cryptocurrencies are not recognized as legal tender, which CBDCs by definition would be. Um, there has to be more than just that as a difference. Okay. Continuing on, unlike central bank money, both traditional and digital, the value of cryptocurrencies is determined entirely by the market and not influenced by factors such as monetary policy or trade surpluses. Electronic cash, the rise of technology like contactless debit cards has made it easier for consumers and businesses to use electronic cash or e money to pay for goods and services, but this also differs from CBDCs. Electronic cash, defined excuse me, by the BIS as a store of value for making payments to retailers or between devices, is usually held at banks or on prepaid cards or digital wallets such as PayPal. CBDCs would not merely be a representation of physical money, as is the case with electronic cash, but a complete replacement for notes and coins. Uh, again, I am not seeing a significant difference right now. So, what are the advantages of CBDCs? They could make payment systems, which are often time consuming and costly, more efficient, reducing transfer and settlement times, and thus stoking economic growth. That part, okay, it does have some validity for me, where they can see things in real time. They can help economies in real time, and perhaps stave off uh, certain events that they're trying to avoid happening. So if they can see it in real time, maybe that's a good thing. But still, that you really don't want them to interfere, right? That's the downside of it. I mean, we I think most of us just want central banks to kind of keep their fingers out, and let the economies function as the markets are driving it to function, not the banks. Some central banks think CBDCs could also counter the rise of cryptocurrencies issued by the private sector, such as Libra, planned for launched in June 2020. Bitcoin and other virtual currencies hampered by wild volatility have presented few realistic threats to central bank control over money, but central bankers fret that Libra could reach billions and quickly erode sovereignty over monetary policy. So again, really, it's just going back to who's going to control the money. Who's going to control the money? Because whoever controls the money, essentially, they're going to be controlling us in a lot of varying degrees. So this is what it's coming down to. Um, okay, let's see. RR, no manipulation is good. Lord Humongous, I'm going horse and cart. Uh, Hastur of Carcosa, anyone else begin to suspect that this virus feels like an incidental test exposure for early stage bioweapon? Hastur, sorry guys. It, anyone that's searching the virus is going to come across those things. It ranging from, coming from the food market, ranging all the way to, yes, there was a bio facility, it was created. Thing is, we're never going to know. Um, we are never going to know the truth about where it's coming from, or how it began. And for that reason, we're never going to know if this is a so-called test or whatever it is. And I can say this much. I took a look at it. I was heavily looking at it. And when you understand or see the realness of it all, the in some cases the severity of it all, those things at that point in time sort of takes a back seat to just being able to get through it. And it's something, you know it's we want to understand it, yes, but when it starts getting a little bit closer to home, the main thing becomes you and your family, excuse me, your colleagues, your friends, and what you can best do. The rest will just have to sort itself out later, and hopefully one day, yeah, we'll get to be able to find the truth. But you know, in it all, I think the lesson is not the lesson, but one of the things about it is, like I say, taking care of yourself is taking care of others, and it falls back into the whole. Sorry, guys, it falls back into the whole burden or blessing thing. Sorry about that. It goes back into the whole be a burden. I mean, be a blessing, not a burden. Taking care of yourself is taking care of others, and that's the thing. We all got to be able to take care of ourselves, and you know that's why a lot of us are in gold and silver, right? We need to take care of ourselves, be our own central bank. We're seeing what central banks are doing. Some of us are fine, some of us are not fine. Um, but it's not everyone is always going to agree. It's just never going to never going to happen. But how about stable coins? They say, okay, here these guys are saying Bitcoin is too volatile and whatnot. Well, what about stable coins? So going to the IMF blog again, from stable coins to central bank digital currencies. Well, I guess that tells you their position straight away. As privately issued stablecoins continue to encroach on more traditional forms of money like cash and bank deposits, policymakers will not simply look on from the sidelines, they will arbitrate. Their rules and their actions will determine how we will eventually pay for everyday items like a cup of coffee, and more importantly, will affect the structure and risk of our financial sector. Our last blog, sorry guys, introduced stable coins, cryptographic tokens that can be easily exchanged, benefiting from the minimal price volatility relative to cash. Consumers might quickly adopt these new, cheaper, faster, and more user friendly services integrated into their social media platforms. However, there also comes with notable risks that require prompt regulatory action. The world of fiat money is in flux, and innovation will transform the landscape of banking and money. The- I think, again, this comes back to privacy, right? I mean, if central bank digital currencies are going to be our future, which the unelected promote, what happens to our privacy and what are the potential risks?
So outline what the risks, some of them are obvious, but outline what some of the risks.
So one of the issues is that I could no longer buy you a cup of coffee without either a private agent or the government knowing about it. And there is certainly a question about whether we should have at least some privacy in our financial dealings without the government, without private parties being able to see them. There is also the potential for some degree of instability. If you do have central banks issuing currencies, it could take commercial banks out of the game in terms of retail payments, and commercial banks are still very important in terms of modern financial systems. So it could create some degree of instability, and we still don't know how it's going to work if you were to have a digital currency, how that would work in terms of the transmission and indeed implementation of monetary policy. It's easy to think about how it would all work much more efficiently, but there are potential bottlenecks that could be created. Then, of course, there is a big risk of hacking. We've seen even very secure systems come to be vulnerable to hacking, and the same could be true of central bank digital currency.
Okay, so legitimate concerns, right? I just want to go back to one comment I missed from James Richter. The thing is, we already operate on a digital currency system. It's just so that we have a few paper coupons, receipts for them also. James, yes, that's the thing. I mean, I don't think they're really showing us anything different right now, except let's get off of paper and go into digital. And let's get off paper, go into digital. We have to because the world seems to want digital, so let's do that. But they're not really, I think, fulfilling the checklist of requirements for a lot of people, and so I don't see how it's going to be a success. And I don't think they're just going to go ahead and do it, and but I do hope again that they do back it with something, because right now there's nothing different. Everybody just wants the power, they want the power, and that's it. Give us a reason to trust you. I mean, I know there's Bitcoin out there, but it seems like central banks are hell bent to not let it happen. There's Libra coming out, and again, central banks seem to be hell bent to not let it happen. And if they give the world what Bitcoin's already giving the world, why are we going to go there? Why are we going to follow it? So give us something different. They have to give something different. And just one more article I want to take a look at. Negative rates are coming for your savings. Yeah, we've been talking about that. Wealthy depositors are already being hit. The less well off are next in the firing line. And this was from Bloomberg back in ending of August of last year. So wealthy depositors are already being hit. The less well off are next in the firing line. Future of money. First, they came for central banks. Then they came for government bonds. Then they came for rich depositors. Then they came for me. Pretty poetic. Negative interest rates are coming for all of us in one form or another as central banks redouble their efforts to avert a global economic slowdown that threatens to unleash deflation. So how can we defend ourselves from the coming assault on our bank balances? So investors seem resigned to the new no yield orthodoxy in fixed income. Norris Bank Investment Management, the world's biggest sovereign wealth fund, revealed on Wednesday, again, this is back in August last year, that it has reversed its long-standing bet that bond yields will climb. Let me go down a bit. Okay, so you are probably already exposed to negative rates if you have any money invested in an international fixed income fund. Someone, after all, owns 16.5 trillion of debt that yields less than zero, with pension funds effectively forced to buy any money you put away every month to build your retirement nest egg is helping to fuel the bonfire of yields. Okay, so how long before even lower balances are subject to monetary assault? This threatens to be a key political controversy in the coming months. Negative rates send a completely wrong signal and lead to a running down of savings. And this is something we know this is one of the fears or concerns of this whole new central bank digital currencies. Let me see if there's anything else down in here. Um, okay, okay. I don't want to spend too much time on that, but again, it just shows that these negative rates. If you're in a cashless area, a cashless society, right? If we go that way, we expect central banks to move the needle on if we're going to spend or if we're going to save. I mean, I don't think there's any other way to look at that. And again, that's why having this power of sorts, you know, it it's not entirely a good thing at times, right? So we need to be our own central banks. That's really the key. We need to be our own central banks. And one thing no one really much considers is when we go cashless. I mean, just think about this. When we go cashless, excuse me. Imagine something like, let's say, this Wuhan virus. Can you imagine your town being under quarantine, and you go to fill up your car with gas or petrol, your central bank digital currency card, or your wallet app? You go to buy gas, and then the clerk tells you, sorry, you can't buy gas. And if you don't have cash, what are you going to do? Now, let's say maybe they don't you're not allowed to buy gas because you're in a quarantined area, and they don't want you to leave that quarantined area. So they're not gonna maybe allow you to put in a full tank. I don't know how it will work, but the point of this is just to say, when you give up that cash, you're giving up freedoms. Okay, there are freedoms that are going to be lost with it. Or you might find, because you're overweight, your health insurance does not allow the purchase of sweets, and since you have no cash, you can't buy any. Maybe you can only purchase certain brands of foods. On your choices become limited thanks to, we all know this happens, corporate lobbying, where yeah, politicians, they get either kickbacks or contributions. So again, it's another way it's another instance where if we let go of this cash, we're giving up some of the freedoms that we may have now. Or monetary policy, again, as we're talking about, where you don't hold cash. Imagine central banks go into deep negative rates, you'll be forced to spend your money or essentially lose it. Do we need faster payments or other number of things that banks, basically tell us what they want? Or more and more financial freedom is starting to take on a whole new meaning? And think about that word, financial freedom. Financial freedom, financial freedom. Think about that word for a bit. The reason There's a reason why in history money starts off being backed by things like gold and silver. Simply put, gold and silver, as well as things like Bitcoin, they are financial freedom. Okay, they are. Gold and silver are stores of wealth, and in the words of J.P. Morgan, money is gold, nothing else. Mr. Morgan was defining more than just money. He was revealing the essential nature of the process by which people are paid for their labor, which in turn is the backbone of our capitalist society. Money comes from the market process, not government. And that's something we need to keep in mind. It comes from a market process, not government. And so there are a lot of things to consider. And that point I made, where financial freedom, there was a time financial freedom meant having enough money to be free to do what you want, or being debt free to be able to do what you want. Financial freedom, that's what it meant, or one of the meanings of it. But more and more, when I look at it, again, this is just a comment here. Financial freedom means free from central banks, having a way to be free from central banks. If you can be free from central banks, there's your financial freedom. Um, Again, that's just my commentary, but again, these are exactly the reasons why all of us understand, to buy gold and silver. It 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 keeps you we all have 2 feet into a current financial system, but things like gold and silver, it allows you to take 1 foot out of the system. And if anything goes wrong with the system, you're in gold and silver. You're okay. Store of wealth, store of value. If over time the system is still okay, um, it's liquid enough to where you can go back in. And again, it's it's why a lot of times people call it an investment slash insurance, because it's one of the few things that can do that for you. And you know, not to demean anyone here, but it's pretty much a no brainer that you should have yourself some gold and silver. 1 foot in the system, 1 foot out. It's your money insurance, health insurance, car insurance, life insurance. We all have that. You tell someone, do you have money insurance? They're going to look at you strange, but it's your money insurance. It's your store of value. And so as central banks tinker and try to figure out what's going on, as legislatures across the world tinker and try to move people to do things here and there, you're 1 foot out of the system, your gold and silver. That's what's going to help you. And perhaps more than just price. That's why we buy it, because we understand these things. And if a central bank comes out with a digital currency backed by gold, terrific. Backed by silver, terrific. Backed by something of value, something real. If not, I don't think you're going to see people adopt it, and you're going to probably see people going into gold and silver at that point, because that's the true money. It's always been. It's always been. So again, there's a lot of reasons to buy gold and silver. It's more than just price. Um, let's see. Cyber DC is okay. They know their time is up. Sound money is a must. Yeah, we need sound money. We need and let's just hope that they will give that to us. I mean, if control is their object, at least start it off with sound money. You know, at least give people that. Um, okay, let's see. 4.9 volume does seem to fluctuate. Okay, I'll keep that in mind. Okay, I'll try to stay on the mic. Let's see. We've done a complete 180 over the years and back to square one. Reshuffle the deck and start a new game. Butchie Harding. Yep. Yeah, that's pretty much what it is, my friend. They're going to reshuffle. And when this new game starts, let's just hope again there is some gold backing this new currency that's going to come out. But they are going to reshuffle, and it's that shuffle that is, the part we need to understand. Whereas that game is being reshuffled, the pieces are removed from the board and going to be placed on the board again. That transition from the old game to the new game, that's the key, and that's where gold and silver is going to help you. It's the transition. Um, a lot of people they look at before, or they look at the new system. I look at the transition, because we're going to have to get from here to there, and it's I don't think it's going to go very smoothly. We're going to have to get from here to there, and again, that's where gold and silver comes into play. Gold and silver, in my opinion, is definitely going to help you get from here to there. And when we come out all on the other side, I think we're going to be in a better position than we left it on this side. So, it's not financial advice, professional or otherwise. It's just my opinion. It's just what I'm doing. So, again, another reason for gold and silver. It's transition. Um, okay, Rolf Steiner. Oh, where'd it go? Rolf Steiner. Rolf Steiner. I think I lost it. Okay. Uh, Pudenda Johnson. Gerald Salenti has made some good calls. He's a little bump. Yeah, we plan to get Gerald back on. He's going to tell you how it is, and we probably won't get monetized for it because I'm sure there's going to be some choice words coming out, but it's fine by us. Gerald, we love him for who he is, and we want him to say things just as he sees it. Uh, let's see. Salente is sharp, but yes, he's a bit over the top with rhetoric. He's a passionate guy. I don't blame him. Yeah, Gerald. I like him. Makes me nervous, but I like him. You just never know. Well, you do know what you're going to get. You just don't know when it's going to come. But I totally love that man. Let's see. Property tax. They always keep 1 foot on your land, and in cash they raise it 3,000%. Then who owns? Okay. Okay. Yeah. I mean, property tax. Well, real estate. If you can get real estate's good, of course. I think every man should have a plot of land to call his own. That's for sure. Real estate as an investment, I I personally I like real estate as a home. As an investment, I'm a bit on the fence with that one. Mainly because if the way I see things, if when things start to get into trouble, I think you're going to see real estate prices fall, and it may not be entirely liquid where it's going to be easy and quick to sell. So I'm a bit hesitant on that. Uh, Timing's everything. I mean, if I guess if you have real estate as an investment, property here, there, timing's everything. Timing is everything. Um, if you have that, good for you. Good for you. You're definitely ahead of me. But for myself, again, I tend to see real estate as a home, and that's it, just a home. Uh, so again, everyone's different. Everyone's different for sure. Let's see. Virus will cyber. The virus will play a big role in achieving the 800 million population target goal. Yeah, I've seen these things. I think we've all seen it years back. Agenda 21. Then I think what Agenda 31 now or something like that, where Georgia Guidestones, all these things. Um, you know, it's that one. It's a bit out there. But it's a bit out there for me. I do gotta admit. I wish I could say I'm in the same boat with you, but uh, not entirely in the same boat there. Let's see, Silver Warrior Patrick, are you seeing shortages of physical? Good question. I think as this virus moves around the world, and as China, we went over it last week. China's a consumption economy. If they're not consuming, a lot of global growth is going to slow down. U.S. is a consumption economy. I believe most first world countries are consumption economies. And the thing is, if this thing moves around, I do think consumption will slow down. And if it slows down, I think you're going to see some prices fall in the beginning, especially as we're seeing copper. But with your question, silver is a secondary product, meaning miners aren't particularly going after silver. They're going after other products and they find silver along the way. They going after copper, they find silver. Going after zinc, they find silver. Whatever it is, they find silver along the way. So if these guys who aren't making money on it, copper guys aren't making money, zinc guys not making money. China's not consuming these raw materials, and I think even if you look at the Baltic Dry Index, you see that number very very low. if if the world is not consuming, constructing, and these metals aren't uh, consumed the way they normally are, I do think silver will take a hit. I do think the supply of silver will start to dwindle. Um, I'm not a professional analyst on that. I'm just looking at it from a very outside in perspective. From the things that I'm seeing. As of today, no shortage in silver from what I see. But as time goes on, and if commodity prices keep dropping, I think you're going to see probably a shortage of silver come into play. I think you're going to see possibly even a separation between the paper price and the physical price. We've seen that before when a shortage happens. So it's not unreasonable to say it could happen again. Um, but I don't want to throw any panic or anything else out there. I'm just saying look at it logically. If I'm looking at it logically, China stops consuming, commodity prices go down, silver comes from these commodities, again, copper, uh, zinc, things like that. If they're not going for these materials because the prices are too low, then I think it's fair to say, yeah, then you're not going to find as much silver coming onto the market. So, I mean, that's just me logically trying to reason it out. But, I'm not professional analyst. I don't have the inside numbers that these guys have. So, disclaimer, right? Disclaimer here. But good question. Um, okay, a couple more questions and think I'm gonna have to go get me some hot tea. My voice is just getting terrible. I'm apologize for that. It's been this way for a few weeks now. Um, let's see. Uh, you guys, man. Okay, okay, you guys are. Yeah, you guys got some some debates going on or comments going on that I don't think I want to get into. You guys are having fun on your own. That's a good thing, right? So, but anyway, I guess I'll be wrapping it up. Um, you got any questions? Just email us. Sales at silverbullion.com.sg. If you have any questions, gold, silver, how to store, or anything like that, let me put this here for you. Okay. Yeah, sorry about that. So, I mean, you got any questions, just go ahead and email us, sales at silverbullion.com.sg. We get to them. We get to the emails and, we try to, we'll answer your questions and we'll look into the volume. Okay. Uh, but again, thank you guys for being here. Email us, get in touch with us. Like I said, we're all in the same boat together. Uh, you gotta do what you gotta do to protect yourself, because when you protect yourself and take care of yourself, you're also taking care of other people. Be that blessing, not the burden. And as always, saddle up. Definitely saddle up for what's coming ahead and silver up as well. You guys take care, and I'll see you next week. Take care.